Joining us now is former Reagan economic advisor Art Laffer. Art, your reaction to this GDP number, and as a lot of this, it's the deregulation coming out of the White House, and it's really this optimism among individuals and businessmen, CEOs, big and small, that this is a new generation, a new era in terms of how we think about the economy, growth, and doing business and working in this country.
You know, I think it's okay, the 3.2%. I do understand that it's the best in a long time, but I would really anticipate a lot more than that coming in the future, Dagan. I mean, we don't even have the corporate tax rate reductions in the third quarter or in the fourth quarter, which means that if any of those people thought there were going to be corporate tax rate reductions, which we now know there will be, they would have postponed some of their decisions, some of their profit-making opportunities until the next year. And January 1st, 2018, that corporate tax rate's coming in. So I would expect strong growth for the next couple of years. Now, you know, life is a marathon. It's not a sprint. And this process goes, but it's in the cards now. There's nothing more we can do either way. The bill is passed, the things are set, and we'll just have to wait to see. But I am quite optimistic about growth in the U.S. If you look at what happened when our tax cuts finally took effect on January 1st, 1983, in that 18 months that followed that, Dagan, from January 1st, 1983 to June 30th, 1984, 18 months, a year and a half, we grew at 12% in real terms, at an 8% annual rate for 6 quarters. It was an amazing growth period, and that same type of growth, maybe not that high, but is possible for us as well.
Wait a minute. You think we're going to get to 8% annualized growth several quarters in a row? You said 6 quarters back in the 80s.
Well, 6 quarters, it happened in the 80s. I don't know what it's going to be in the next period, but we could have a lot more growth than 3%, Dagan. I mean, a lot more growth. Now, no, nothing's for sure, and as you know, I'm much better at forecasting the past than I am the future. But if you infer the future from the past, we should have very, very substantial growth over the next several years. And I'm quite excited about that future. But it is a marathon. It's a long period, and the daily wait, day in, day out, is tedious and long. But I think we're on the right side of the cards. And what you guys talked about is the markets can retreat. But ask yourself the question. Would you rather be sitting here with that market the way it is, or would you rather be sitting here with the market we had under Reagan that had dropped dramatically down to the lowest point was in August 1982 because we delayed the tax cuts? I love our position today with regards to the stock market or with regards to the economy. I can't imagine a better set of policies than we have going forward.
James.
Art, James Freeman here at the Wall Street Journal.
Hi, James. How are you?
Good to see you.
Good to see you.
I'm wondering if you could kind of lay out for us how U.S. competitiveness is now stacking up with the rest of the world. You've obviously been advocating your whole career for more pro-growth policy. I don't know, did you think we could get down to 21% on the corporate rate? And what do you think the impact is on our competitive position?
You know I'm an optimist, James. I thought we'd get 15%, but just joking. I'm very happy with 21%. I'm not disappointed with it. I think competitiveness now in the U.S. is not against us. It was very much against us at a 35% statutory rate. We were the highest in the OECD, and it really did inure very much to our detriment, that high rate. We've now lowered it down to 21%. You're going to see a lot of other countries emulate us and bring their rates down too, which is what it should be. But no longer does the competitive environment work against us. Now, it's not hugely in favor of us at 21%, but it's not against us, and that will work very well towards growth in the U.S. I'm expecting very solid growth for the next 2, 3, 4 years.
On growth, to the lead up of tax reform passage, there was a debate of proponents saying that the tax reform is going to pay for itself with growth, pay for the tax reform price tag. Joint Committee on Taxation said that it's not. Democrats have all of a sudden, newfound concern over the deficit, worried about that, deficit hawks as well. So in your opinion, will it pay for itself?
Let me just say the growth will offset a lot of the static deficit. It really will. And they've got that correctly. About a little bit more than half of the static deficit will be offset by growth. But what will offset the rest and will in fact lead to surpluses, increases in revenues, are what are called personal responses. There'll be less tax sheltering. There'll be less tax evasion. Companies will no longer move their headquarters abroad. There'll be all of these other behavioral responses, that each one of which could more than offset the static revenue losses. I mean, sheltering is a huge, huge deal. And at 35%, sheltering is much more attractive than it is at 21%. Tax evasion is much more attractive at 35% than it is 21%. Changing business organizational forms, none of this having to do with growth, all work very much in our favor. And my guess, my look at the 10 years coming out from my models and what I've been working on, is that we will increase revenues above what they would have been by about $1.5 trillion over the next 10 years. And part of that is growth, but not all of that by any means is growth. These guys do not include these behavioral aspects in their models, and that's why they're always, always, always wrong, as they were with our tax cut, with Kennedy's tax cut, with all of these positions. And, you know, they've got to look at behavioral aspects.
Art, Sean Spicer has a question.
Hey, Art,
yes.
Speaking of those projections, Chairman of the Council of Economic Advisors, Kevin Hassett, said that it's going to take about 3 months for a lot of this economic impact to really be borne out in the markets and for us to be seeing the results. Do you agree with that? Do you think it's going to be sooner, or do you think it's going to be further away in terms of when we really see it?
Kevin Hassett may be the best appointment Trump made. He's just a spectacular economist. And I think you were very, very lucky to have a man of that quality as the chairman of the Council of Economic Advisors. And he's talked about real wages and all that. I don't know what all he's talking about, but I think, Sean, already some of the president's tax rate reductions have taken effect and have shown responses. The stock market has clearly done that. You've got some long-term growth coming in GDP. You've got a lot of other things that are starting to happen now, and all they will do is build greater and greater responses as time goes on. I don't think you can look at it all happening on one quarter or the next quarter. It's a long process of accumulation, and I'm very excited about being this side of the curve to believe. It really looks good.
On the individual side, some of it's messy. I looked at it, well, in part because it expires. It expires in 2025, and I know the reasoning. I know the rules that the senators had to abide by. But nevertheless, you have tax cuts that expire. The AMT is still there, although it cuts the number of people who are getting hit by it down to 200,000 people versus 5.2 million before. But again, it comes back if Congress doesn't do anything in less than 8 years.
I love the perspective of you young people. I'm 77 years old.
I love you for saying I'm young,
2025 is a long way away. But let me just say, we had some of the problems like this in 1981. We reformed the tax codes in 1986. It was only 5 years before we changed it 100% again. I fully expect President Trump and this Congress to do another major tax reform after 2 or 3 years. In his second term, I expect him to do a major tax reform that cleans up all of this stuff you're talking about, Dagan. And by that time, the Democrats will be on board with us as they were in 86. We passed our Senate bill in 86, 97-3, Dagan. So what you're going to see here is once that growth comes in, you're going to see all the Democrats wanting to be Republicans, and that's the way it should be.
12 senators voted, including Dianne Feinstein, voted for the Bush tax cuts back in 2001. It used to be when at least some Democrats thought that people deserved to keep more of their own money.